All right, here we are with Darren Lovell of Cardinal Financial. This is part 2 of our series on what's happening in the market, specifically towards interest rates and what are we doing. We've made a statement in part 1 that today is the best time to be buying a house in the last 3 years. There hasn't been a better time. That may be a statement that a lot of people are scratching their head on. So let's unpack that a little bit, Darren.
Right.
Why is that?
So let me ask you a question, Bruce. 6 months ago, if you listed a house for $400,000, what do you think that house would have sold for?
I bet I probably would have been able to get 420 to 440, somewhere between 5 to 10% over list.
Okay, and today that same house, what do you think?
We'd be very fortunate to get list.
Yeah. So
typically a little less.
So the whole point of that, that question was there's less competition out there from a buyer perspective. There's more inventory out there in the market. We're starting to see sellers be more willing to provide a seller concession, sometimes pay for title insurance, and that's something we hadn't seen in 3 years.
Yeah.
So if I can go in and pay less for that house and get some assistance from a seller's perspective, and like you said, pay list or maybe a little bit less versus paying 5 or 10% over, that's a great environment for whether it's a first-time home buyer or somebody buying their 5th home. So yes, interest rates are higher temporarily.
Yes.
And we got solutions we'll talk about relative to never being affected by that higher interest rate when you're combining some of the concessions that you can get to lower that interest rate on a temporary basis.
Right, so there are things that we can do to address the interest rate. I just want to comment on the market just quickly while we're on talking about the market. The sky's not falling, okay?
No.
We're returning to a more balanced market. The definition of a balanced market is somewhere between 30 and 40 days on market. I looked this morning for Collin County. Average days on market in Collin County for October is 35 days. So we're right there in a balanced market. Balanced market meaning, to your point, buyers can negotiate for things, sellers can negotiate for things, title policy is totally negotiable, not like it was even just 6 months ago.
Right, and the sky's not falling from somebody looking to sell their house as well. It just means that we're not going to see double-digit appreciation going forward. What we'll probably return to is a more normalized market where you see 3, 4, and 5% appreciation. So it's not a devaluation of the home.
Right.
You're just not able to get 5 and 10% over the value of that home. And that's a normal market, and that's healthy for everyone.
So today, interest rates are over 7%, right? On a typical 30-year mortgage, typically that we'd be over 7%. They are what they are, but what can buyers do to be able to address that?
Yeah, so I think there's 2 things I want to address with that. One is, what are interest rates expected to do in the future?
Right.
And so, this is not my opinion. This is going out and listening to a lot of folks that know a lot more than I do, that look at history as the indicator as what is going to happen in the future. So there's one thing that causes a lot of confusion. The perception is when the Fed raises the Fed fund rate, that's what causes interest rates to go up. Mm-hmm. And the Fed's meeting tomorrow, right? And they're going to raise the Fed fund rate by 75 basis points. But it's not the Fed fund rate that causes rates to go up, it's inflation. Inflation is key to interest rates rising and interest rates dropping.
Okay.
So not to nerd everybody out here, and again, I'd love to talk with folks and tell them a little bit more in detail about this, but if you look at inflation from January through September of 2021, inflation was still low, and I'm talking about core inflation, which is inflation minus food and energy.
Okay.
That's considered core inflation. But starting in October, November, December of 2021, we had inflation. So the way that the Fed measures inflation, it looks at what was inflation 12 months ago and what is it now. And based on that measurement is how they come out with core inflation. So when you're measuring a very high number now against a very low number 12 months ago, it makes that inflation number very high.
Right.
But when you start measuring a high number 12 months ago against a high number now, it's going to look, inflation's not going to go anywhere in the short term, but the inflation reading is going to start dropping as we get into October, November, and December. Based on that, a lot of folks, a lot smarter than me, are predicting by January of 2023, interest rates in the 5s.
Wow.
Fannie Mae, conventional loan. Fannie Mae came out 2 weeks ago and said 4.5% by June of 2023. And then the Mortgage Bankers Association came out and was predicting January in the 5s. So a lot of people are predicting that interest rates will drop. And again, it's all about inflation and that inflation reading. And so one key data point. So in December of 2021, inflation was a 5.45%. So we had a good high inflation reading. The last reading we had in September of 2022 was 6.63, so not a lot of difference.
Right.
So that next reading that comes out, very possibly you could start to see inflation drop. When inflation drops, interest rates will go with it.
Very interesting. So if I can dumb that down a little bit for me, if we are hesitant to buy a house, if I'm a buyer and I'm hesitant to buy a house today, I have to know that the interest rate that I'm getting on my mortgage is temporary.
Very temporary.
Because we can always refinance.
Absolutely.
This is where the expression comes from. Marry the house, date the interest rate. Right?
Well, and with that, so the Lovell Team, what we're doing for our clients is we realize that interest rates are higher today, but we also realize interest rates are going to get lower in the future, and we're a relationship-based lender, like we have been with you and Jill for years. When interest rates do drop, come back to us and we will waive 100% of our lender fee on that refinance. So it doesn't make it.
Thank you.
It doesn't make it a no-cost refinance, but it makes it a very low-cost refinance. So when rates do drop in 2023, we'll get you permanently into that lower interest rate.
Yeah, that's awesome. That's just an example of how we can get in now at a good market time, when you can negotiate, when you can maybe buy a house less than list. There's a lot of reasons why this is a great time for buyers, assuming you qualify, right? And obviously interest rates impact your ability to qualify or not qualify.
Absolutely.
But assuming you can qualify, there's always a bright light on the horizon to be able to refinance and get into something that's much more comfortable for you. So that's great. Are there other things that people can do today?
Absolutely. So let's mitigate the interest rate and where we're at now by a temporary buy-down program, which is called a 2-in-1 buy-down program.
Right.
So, and it works well in this environment because sellers are more apt to provide seller concessions, right? So let's say the interest rate today is 7.125%. What the buy-down program allows you to do is for the first year of that mortgage, buy the interest rate down to 5.125%. On a $400,000 mortgage, that's a $500 a month savings in that first year.
Yeah, wow.
In the second year, it resets to 6.125%.
Right.
And then in the third year, it goes to 7.125%. But within that window, rates are going to be lower, and you can permanently refinance into that fixed lower rate.
Nice, nice. All right, that's great. Well, other things we need to touch on here before we conclude that comes to your mind?
No, I just can't reiterate how I think this is the perfect buying opportunity. Interest rates are where they are, but there's good things on the horizon. Interest rates are going to drop. So if you say, I want to wait 6 months, right? I'm on the fence that I want to wait 6 months. Just remember what it was like prior to Mother's Day, not that long ago,
right,
where you're competing against everybody to purchase that home over list price. So while you may get that lower interest rate at that point in time, the odds are you're going to pay more for that home, and trying to find that perfect home against the competition that's going to be out there is going to be more challenging.
Because there are people waiting.
Absolutely.
And those people will come back into the market and create a surge of competition for buyers. And we're going to be back into that same situation now. So our recommendation, my recommendation, your recommendation is don't wait.
Don't wait. Buy now.
Yeah, don't wait. Don't wait. Know that you can refinance if you're concerned about the interest rate, but buy that home, negotiate on that home, get a great price on it, and then get your lower interest rate maybe a little bit down the road, or do a buy down program.
Yeah, and I would just leave it with, in this market especially, like any market, who you work for matters. And Bruce and Jill and Josh have a wealth of experience that they bring to the table, and they can negotiate on your behalf to get you the best deal possible.
Excellent, thank you. Well, listen, if any of this raises more questions with you, feel free to reach out to Darren. Darren, one more time, how can people contact you?
On my cell, 8 a.m. to 9 p.m., 7 days a week, 817-487-7110.
And if you want to reach out to Bruce and Jill, you know how. You're clearly watching this on our YouTube channel, so there's contact information there. Okay, guys, thanks. Our food's arrived. I'm hungry. Let's eat.
Let's eat.
All right, that's another episode of Taco-Bout-Tuesday. Talk to you later. Bye.